Bienvenidos a Tres Respuestas, un espacio de conversación, de opinión y de propuestas. Nuestro invitado de hoy es Matt Harris, quizás una de las personas más reconocidas a nivel mundial por su experiencia en infraestructura. Es uno de los inversionistas más respetados en todo el mundo por el trabajo que ha hecho en infraestructura en distintos lugares del planeta. Es una persona que conoce muy bien cómo se está comportando el mundo en torno a la infraestructura vial, la infraestructura energética, la infraestructura de datos, pero sobre todo es una persona que tiene una historia de vida espectacular, no solamente por su éxito como empresario, sino también por su conocimiento como banquero y anteriormente también por su impecable background en materia académica. Es también el presidente del Centro para el Futuro de la Energía de la Universidad de Columbia. Entonces, nos complace mucho que esté con nosotros. Matt, it's such a pleasure to have you in Tres Respuestas. Thank you for being with us.
Ivan, it's a pleasure to be here. I've watched some of the past episodes and delighted to be with you today. Thank you for having me.
Well, let me start by asking how do you define yourself? You have an impressive career as an investor, as a banker, but also as an infrastructure expert. But how would you define yourself? And tell us a little bit about your life. How was your childhood, and what was your experience family-wise? Tell us something about that past.
Absolutely. So I grew up in a small town in Southern California called Santa Barbara, and it's one of these unique towns that sits between the mountains and the ocean, right on the coastline, and it was a magical place to grow up. My father was a stockbroker. He grew up in rural Montana and made his way to California for university. My mother grew up in Los Angeles and made her way up to Santa Barbara from Los Angeles. They met in the 1950s and ended up staying in Santa Barbara for the rest of their life. And I'll tell you, Yvonne, that shaped my childhood a great degree because my mother was passionate about the outdoors. And I found my passion through her in terms of the natural world, my fascination with the natural world. I made my way to Los Angeles for university. My dad, as I mentioned, was in the stock business. I studied at UCLA, and my parents had taken me on a trip to New York in 1975. And I remember it vividly because we flew on the red eye, the overnight flight, and I was sleepy-eyed as a 14 or 15-year-old boy. But I remember driving into Manhattan. This is the first time I'd been on an airplane, and I was fascinated by New York City, by the size, by the energy, by the depth of it all. And I said to myself at the time, I need to get here. So true to my word, as soon as I graduated, I came to New York in 1984, and I had two jobs. The first was an investment bank, Kidder Peabody. The second was an investment bank, First Boston. And those shaped my career. I got to understand, in particular, energy and infrastructure, and became someone who's very versed in energy and power infrastructure. And I wanted in 2005, 2006 to do something different. And one of the partners that I worked at First Boston with, he and I put our heads together and we said, you know what? Infrastructure is emerging as its own asset class. Why don't we think about raising some capital and becoming an infrastructure investor? So that was 2006. We formed Global Infrastructure Partners, GIP, in 2006, initially backed by Credit Suisse and General Electric. And we have grown that over the last almost 20 years into one of the largest infrastructure asset managers in the world today. Last year, we combined in a strategic transaction with BlackRock, and today are part of the BlackRock family. And Ivan, you mentioned, who am I? How do I define myself? That's changed over time, as I'm sure it has for all of us. Today, what I would say to you is I sit myself passionate about the intersection between the natural world and the built world. And in particular, how can we design and think about infrastructure, which really is the way that we deliver the everyday services that you and I depend on, in a way that is interdependent and in recognition of the importance of the natural world. And what are those opportunities for the convergence of the built world and the natural world that make all of us happier, more productive, and leading more fulfilling lives?
Well, I think that's such an impressive story, Matt, and obviously there are many accomplishments. But I definitely want to know, what are your guiding principles as a professional and as a human being? Because I mean, when you hear the story and you get to understand the success that you have been able to achieve, obviously there's some stories that have formed you from people that have been your mentors, your own family, but some of those that you have made your own mantra of daily work. Which ones would you highlight?
I think what I learned from my parents would be two or three critical ones. One is empathy, and to understand, we're all on this earth together, doing the best we can, and to really try to see the world through other people's eyes in addition to my own. The second would be humility, to go about your work in your daily life with a strong dose of humility. And then the third would be dedication, to pour your passion into whatever it is that is your calling, your dharma, what you're here to do, and try to combine those three things into a productive life where you connect with other people, help other people, and hopefully the world's a better place.
And what were your major lessons from your life as an investment banker before you decided to go on your own? Because I have that conversation with many of my students in some of the universities, but also with some of the young social innovators that I mentor through the foundation in Colombia. And I always tell them that it's great to understand how banking works, how you define the value of money, how you learn to multiply money, and how you learn to manage risk. So I wanted to ask, what were the lessons that you got that you keep on your personal daily activities that you learn from investment banking?
So I think you just hit a number of them. I mean, I learned how to think financially, how to look at a balance sheet, an income statement, and a company, and understand its financial attributes. I learned a whole series of different products, equity, debt, currency, and a whole series of different industries. Because before I got deeply involved in energy and infrastructure, I worked in airlines, other transportation, technology, software. So I got a really broad-based view of the various industry segments that one can play in. And then the third would be globalization, understanding the global nature of the world that we live in, and how important it is to be able to traverse and converse across different cultures and different geographies. I mean, I spend a lot of my time, in my life today in different geographies. I mean, coming to visit you in Colombia, going to the Middle East. And I think it was always informed by a curiosity to understand how different cultures and different people in different parts of the world see the world. And I learned a lot of that in investment banking. I mean, I traveled some with my parents, but it was very parochial. We traveled to sort of the American West. We didn't travel overseas in any way, shape, or form. But in my investment banking career, I was really introduced to the importance of globalization and understanding different cultures.
And what were your maybe big concerns, or maybe hesitations, or doubtful moments when you decided to move from being a successful investment banker in one of the biggest banking corporations to start a business on your own, investing in a sector that it's quite complex, quite risky, and that has so multiple variables that can maybe either throw you through a turmoil or to make you very successful. How was that moment when you decided to start a business on your own in a sector that is so complex and that requires such big amounts of capital?
It's a great question. And I would answer that. I wanted to become an investor. I started to see, um, about 10 years before I made the move, that I wanted to become an investor. And so what does that actually mean? I really was fascinated by the strategic perspective that was needed to invest in a business, how the business made decisions about which direction it traveled, how it dealt with competitive threats, how it dealt with economic or other issues that it faced. And I wasn't getting close enough to that in being an investment banker and being an advisor. And in becoming an investor, one of the things we do at GIP is we invest, and we also have to operate the companies. My partner always said to me, as an investment banker, you could advise anybody on anything to buy, but the kind of tough part begins once you own what you buy. And as an investment banker, you didn't have to do that. And boy, have I seen, the challenges and the dedication required to really run one of these businesses. And infrastructure sits at a unique, sort of place on the risk spectrum. It's less risky than some types of alternative assets like private equity or venture capital, but it's also not a bond. So it does have real risk. And you have to make sure you are very focused on all the things that are going on in whether it's in energy, transportation, water, waste, that can affect the performance of that asset. So it got me closer to the action, if you will. And that's what I really like about it.
So when you made that decision of building global infrastructure partners and you had to go and raise capital, obviously you were using your reputation, your knowledge, your partner's reputation and knowledge in order to bring the investors. But once you start, what drives the farther level of confidence is which is your first home run. So why don't you tell us about which was that first home run that allowed you to grow even bigger and get more capital, and how tough was to make that home run possible?
So we did a couple of transactions early on in the history of GIP. One was we bought the airport in London, known as London City. It was in the East End of London, and we at the time had a thesis at GIP that had not yet been tested, and the thesis was the following. Infrastructure is often a relatively privileged asset class, Ivan. And what I mean by that is it's oftentimes because these assets are so large and they're so critically important, you typically don't have multiple assets. So, in the city of Bogota, you have one airport, one main airport. They're too large to be building a competing airport. So these assets have scale, they have high barriers to entry, and as a result, they operate on a pretty steady basis. Now, compare that with a technology business or a retail business or a manufacturing business, where you probably have a significant amount of competition, low-cost country threat, technological change. And the type of the management that you need for a competitive business like that has to be very, very top decile. And in infrastructure, you didn't always need that type of a management team. We brought a new perspective. We brought a perspective that infrastructure can be changed operationally by the same techniques used in traditional industrial businesses. So we started to build this capability, and the first place we deployed it was into London City Airport. And we started to make big changes in the operational performance of assets that, theretofore were considered pretty sleepy. We did that at London City. We did it at a joint venture we had with Chesapeake Energy in the midstream oil and gas space. And we did it with Gatwick, the other airport we bought in London. So these transactions that were in our first fund were good performers. They were strong performers, and they set a foundation for us that we could grow from. We had credibility that we didn't have when we first raised our fund, where we didn't have any investments that we had made yet. And once we established that baseline, it changed the dynamic in terms of, the amount of capital we could raise, the talent we could attract, and the types of management teams and corporate partners we could do business with.
Obviously, you've made a lot of investments. You have a great storyline of success stories. But I have to ask, what is your checklist when Matt Harris looks at a specific investment in infrastructure? Which are the main elements of that checklist that you need to have enough clarity to know that it makes sense to look deeper and eventually to make the investment? Do you have like that kind of a Matt Harris checklist that you could share with us?
Absolutely. So there's 4 or 5 critical things that an asset needs to stack up against. One, it needs to have all the characteristics of infrastructure. High barriers to entry, long-lived assets, typically a contractual structure that allows you to have cash flow visibility and potentially dividend yield visibility. And importantly, particularly in this environment, inflation protection. So it has to meet the definition of infrastructure. And as the infrastructure asset class has evolved over the years, that definition has been stretched across the industry. But I try to stay consistent within that framework. Does it meet those established criteria that we started with when we first joined GIP? 2, who's the management team? How experienced are they? Are they passionate about this? Are they all in? You need a committed management team to partner with you. That's really, really important. What's the capital structure? Is it over leveraged? Are you putting too much leverage on it? We're in a different environment today where rates are potentially biased to the upside, in my opinion. So do you have a capital structure that allows you to fix those rates and be confident that even in a downside scenario, you won't be too over leveraged? And then 2 additional things. The first is, what is your downside case, right? How bad could it be? And what does your return look like in that case? And then making sure that these assets are not overly subject to market competition. It's not a market-based asset. And what do I mean by that? So a lot of the assets that you see out in the investment world today, have market risk in terms of new competition, low-cost country threat, et cetera. What we have found is that infrastructure doesn't necessarily face those same risks. I mentioned it a few minutes ago. And you want to make sure that the business actually really reflects that there isn't an opportunity for new competitors to emerge. Again, an airport is a great example, right? If you have an airport in Bogota, you're not going to get a new airport competitor. They're not going to come in from somewhere else in the world and say, "Hey, I want to build an airport in Bogota." So those market-based kind of elements that are not able to kind of penetrate or compete against your asset would be the last one. So it has to stack up against all those things. And then ultimately, you got to go with your gut, right? You got to go with what you feel and what your experience base is. A lot of times we're buying assets that we've bought before in terms of the industry segment. And we've learned over 20 years what really works and what really doesn't.
And Matt, for example, I want to know your opinion about public-private partnerships, especially in the global South, because obviously you've made investments in the global south. You've seen concessions, you've seen different kinds of projects, but do you think PPPs are already mature, for example, in places like Latin America, maybe Africa, Southeast Asia? Or do you think there's still a lot of things to be fixed in order to drive the enough investment that is needed to give a new big push to the infrastructure development in the global south?
I think it's a huge opportunity. I think it's far from mature. I put together a partnership 2 years ago with Gina Raimondo in Southeast Asia, and she was conceiving as part of her Indo-Pacific Economic Framework how to attract infrastructure into the partner countries, the Philippines, Thailand, Vietnam, etc. And she had a framework that did not include the big capital allocators. So GIP, Brookfield, Blackstone, KKR, the big capital allocators in infrastructure. And we talked about it, and I suggested to her it would be very positive if we could form a coalition between a government, the big infrastructure firms, and then the local players in each of the selected countries, and bring those parties together, establish a framework for what were the investment priorities of the government, what capital and other issues did the private sector players in that country need, and then what did the allocators need. And that was that resulted in a coalition framework that we signed about 18 months ago. The Philippines was the first country where we implemented this process, and it's produced some remarkable results in terms of making the infrastructure environment more friendly to all three parties in that country. I think that governments today are wrestling with many, many issues, including leverage levels and debt deficits. Infrastructure, I think, is the golden opportunity for investment over the next 25 to 50 years. And we have to have more public-private partnerships. They can take all kinds of different forms. There's no one prescriptive way to do it, but public-private partnerships are absolutely essential, in my opinion, to the growth of infrastructure investment in the global south.
And let me try to connect PPPs with the development of local capital markets in the global south in terms of using, for example, some debt products so that the public savings can also be deployed for that kind of projects, or eventually also having bonds or some kinds of asset-backed securities. Do you think the global south is still lagging in terms of developing local capital markets that could serve big infrastructure projects?
No question. I think that also is a big opportunity. I mean, I think there are three things that you want to make sure are in place when you think about infrastructure in the global south. One is, how are you going to manage the currency if currency is an issue? Two, what is sort of the regulatory and legislative position? If it's a regulated asset, is that regulation transparent? Is it tested? What legislative aspects of the infrastructure are needed? Is that clear? And then the last piece is who are the local partners? I know for GIP, we need a local partner if we're going to invest in the global south. And so those three things coming into place enable more financing, both in the bank market and in the capital markets. And so we get a virtuous sort of circle that we're creating. So I think there is quite a bit of work still to do in terms of making sure we have all the criteria in place for these different projects, and then the capital markets to follow that, and bringing and introducing new investors into these markets who can rely on the reputation and the experience of a big infrastructure investor, see that you have the local relationships through the local partner, and see that you have a responsive government in terms of whatever the regulation or legislation is that's needed. That will foster growth in the capital markets.
Let me now switch topics to the US. And I have to share with you that maybe one of my favorite books on infrastructure was published almost 2 decades ago by a banker called Felix Rohatyn. And
Sure.
he published this book called Bold Endeavors, where he describes all these big infrastructure projects that shape the United States, the railroad system, the highway system, Hoover Dam, the connection between the Great Lakes, all these great infrastructure projects that transform the US. And I need to ask you, which projects do you believe are going to be the next bold endeavors in terms of big infrastructure in the United States of America?
So I think, and that's a great question. I'm glad you asked it, because I think it also lines up against why is infrastructure such an attractive place to be thinking about investment. And I think there are 3 or 4 critical areas. So all of the things that Felix spoke about in that book that you referred to were kind of quintessential and vital U.S. infrastructure. And if you travel around the US, one thing you'll notice is that there is a significant amount of refurbishment that is needed in a lot of that infrastructure. It's not entirely clear that state, local, and even federal government is funded to be able to do that. So one big opportunity is in public-private partnerships aimed at restoring much of that, kind of legacy historical infrastructure. If you come to New York recently, you'll see some pretty significant renovations going on at JFK, Newark, and at LaGuardia. And all 3 of those are public-private partnerships where private capital is being allocated into those airports to upgrade them, technologically, digitally, et cetera. And that, along with all of the other things you mentioned, is a huge opportunity. The next is energy transition and decarbonization. By my calculation, that's about $100 billion of infrastructure, $100 trillion of infrastructure capital required over the next 50 years. Everything from renewable energy to clean fuels, electrification, decarbonization of hard to abate sectors like steel, hydrogen, aluminum, petrochemicals. That is a huge opportunity in the US and globally. And then the third is digitization, AI, power, data centers, all of kind of that enabling infrastructure that allows us to capitalize on the human, capability for technology and the ability of that technology to make, day-to-day lives better. That is a massive opportunity. I think it's about $1 trillion just in US data centers alone over the next 5 years. So those 3 areas for the US represent a massive amount of capital. I refer to it as a golden age for infrastructure. And then you could add on to that, Yvonne, is the opportunity in the global South. Because from Asia all the way to Latin America, that opportunity of infrastructure in that part of the world is equally dynamic and is one where I think you'll see lots of dollars spent as well.
So if we look at those 3 areas that you just mentioned, I definitely have to ask something that is also one of your favorite topics, that is energy, and particularly energy transition. As I've been looking to the trends, at least of the last 2 or 3 years, all this AI revolution is putting a lot of demand on the energy system. And I'm starting to see that in some parts of the world, and even in some parts of the US, the energy transition is going through a very discrete slowdown. But I wanted to get your point of view. Do you think this AI excess demand of electricity and energy is going to slow down the speed of the energy transition that we've seen in the last decade?
I think it will be. I think it will be part of that. Part of that, yes. I think what we have to remember when it comes to energy transition and decarbonization is we all have benefited from the immense productivity and opportunity contained in the fossil fuel economy. Every single one of us benefit from that. About 80% of the world that we live in today, everything from electricity to the cars we drive to the stovetops we cook on, is fueled by molecules, coming out of the oil and gas industry. Only 20% through electrification. And we have to remember that energy is critical to the improvement, along with education and healthcare, to the improvement of standard in living, right? We still have many people, almost 1 billion people, that don't have access to power in the world today. And so the access to energy, what we can call energy security, is critical. And I think what we're seeing, some of it is in fact linked to the growth in power that is fueling AI. But we're seeing this kind of this tension between energy security. We saw it coming out of the Ukrainian war. Energy affordability, right? The consumer wants affordable energy. And then that energy value chain being decarbonized, which also is very, very important. So I think you're going to see an uneven, sort of progress curve. It's not going to all be linear. We still today, in most parts of the world, make it cheaper to leave carbon in your manufacturing process than to sequester it. And I think, just as a basic law of economics, until you price that carbon or don't allow someone to externalize that cost, they have to actually account for it, then it's probably going to stay in the product. So I think there's a long way to go. That being said, there's some incredibly exciting progress that's been made around renewable energy around the world. And by the way, we do need an all of the above approach to energy, right? We need renewables today. We need natural gas. We need nuclear, geothermal, hydro. But great progress and some incredible technology to kind of, optimize the next generation of infrastructure that we're talking about here to help in that transition and that path to decarbonization.
Matt, let me make a switch to geopolitics and infrastructure, because based on the trends that you have described, obviously there's a very visible competition between US and China. And even from my own experience when I was a head of state, I saw that in many, if not all of the big infrastructure biddings, there was always the presence of Chinese corporations wanting to get in LATAM. And there was a great absence of US companies competing for that infrastructure. Do you think the US in some sort of way is leaving an open space for China to grow their strategic investments in infrastructure in the case of LATAM? And let me also connect this. When I look, how was the trade balance between the US and Latin America 20 years ago? At least 95 or 97% of the Latin American countries 20 years ago had the US as their number one trading partner. When you look at the numbers today, it has changed completely. It's almost 95% of Latin American countries have China as their number one trading partner. Do you believe that maybe the US is losing an opportunity? And if that is the case, what would you recommend for US companies to be more engaged and to participate more actively in the infrastructure biddings in LATAM?
So I think infrastructure is incredibly strategic. And I think it's not lost on anybody that the national security implications of infrastructure are profound. What I would encourage any government to do is to think about that and to build partnerships, because we have not only the potential for buttressing national security, but also to pursue attractive investments, right? Infrastructure is attractive. So, we did a really interesting transaction a couple of years ago in Peru around a port, the exports of which mostly are copper. We have investments in renewable energy, LNG, power throughout Latin America. So I think it's possible to do both, Yvonne, to extend your reach as a national security measure, as a country, but also to find attractive investments for your private sector partners in all of these countries.
Matt, since I know we're running out of time, I want to ask a last infrastructure question, and then I'm going to ask some very interesting personal questions because you have a lot to share with us and lessons that we have to take from you. But let me ask you this. If you were to make, let's say, a risky decision of a new kind of infrastructure that we should invest in the next 5 years, which one is bugging your mind and trying to say, you know, Matt, let's go for it, make a risky move and be the first mover so you can get more asset investment in this kind of infrastructure? What would that be?
So what I would look at and have been looking at is what I refer to as infratech, and that's a convergence of infrastructure and technology. Is infrastructure, at least historically, has been relatively single purpose in its design, analog, somewhat reactive, somewhat manual, supply based, and single benefit oriented. The infrastructure of the future, for many different reasons, is going to have to be digitized. It's going to be, automated and very proactive. It's going to need to be much more circular and regenerative, and it's going to have to demand driven, right? It's the demand side of the equation that's going to drive that infrastructure, and even to the point that it's distributed in ways that it has not been before. Technology is going to drive those changes, right? AI, for sure, automation, sensors, IoT, distributed ledger, robotics, computer vision, all of these technologies are going to have to be, attached in and a fundamental part of the infrastructure of the next, 25 years. And I think we're still very early in that cycle. And so if I were doing something that was infrastructure related, it'd be finding those companies that will improve the performance. There are really three areas. It needs to be a more efficient, more resilient, and it needs to be decarbonized. And what technologies can help infrastructure to do that? It's an area that we're very focused on.
That's very interesting. And Matt, I'm going to make a big change of topics. But one of maybe the things that best define you is you have a passion for meditation, and you have been meditating for a long time. What does meditation means to you, and how meditation has also guided you through your personality and also your own business leadership success?
So I guess I've been meditating for about 15 years, and it was a little bit rocky at the beginning because, like so many of us, I would wake up in the morning with, just thought after thought after thought going through my head about what I needed to do during the day, what I needed to accomplish, who I needed to call, how I needed to solve this or solve that. And so what it's given to me over that time, Yvonne, is an ability to kind of clear away those thoughts, and have a lot more clarity on what I actually want to be doing, how I want to be, in the world, what kind of person I want to be, how I want to be in relationship with people, being more loving, more compassionate, and more clear on what I want to do. So for me, it's been a fantastic, thing that I've picked up, and my life has changed measurably because of it.
And the other passion that you have is art. What does art means to you, and what kind of art are you do you like to buy? What kind of art do you like to go and maybe enjoy in a museum? And what does art also brings to your life? Because for someone that has such a numerical mind, this passion for humanism is also something that I really admire from you. So why don't you share a little bit of that humanistic part of your life?
So, what so in terms of type of art, I really like contemporary art. I like kind of the range from the 1950s and 1960s to the present. Some, sort of very established artists, and then some very brand new artists, including African American artists. I like the kind of abstract, genre. But what really appeals to me about art is storytelling. It's like listening to a good song. It's a story that the artist is telling, and I particularly like to try to connect to what that artist is trying to say about himself or say about or herself, say about their life. That to me is kind of the fabric of life. You call it humanism. It's trying to see the world through other people's eyes, and I find somebody who can actually express that through a piece of art is a really unique, human being.
And Matt, my last question: if the Matt Harris of today were to meet that Californian, young and full of energy a student that came to New York many years ago, what would you tell to that Matt Harris about life expectations and the things you've met?
So what I would say, that's a great question. I would say slow down, uh, get clear on who you are and what you want to do in your life, and enjoy it. Enjoy it in the moment. I think certainly me as a young person, right? I was constantly trying to get to the destination, and I finally realized there is no destination. The journey is the destination. And it took me, a few extra years to really find more equanimity around that concept. But I would tell that younger version of myself, just enjoy the ride and be alive, right? Somebody said to me the other day, I asked him, "Are you happy?" And he said, "Sometimes, but I'm alive and I'm feeling, everything it means to be alive," right? Because alive is happiness and it's joy, but it's also difficulty. It's also tragedy and sorrow. I mean, the full range of what we can experience. He said, "But I'm alive. I'm feeling all that." So I would try to coach that young 20 something to try to keep that in mind.
Matt, it has been such a pleasure to share this conversation with you. I'm really looking forward for you to come back to Colombia. We want you to come to the Amazon so you can enjoy that part of our landscape. Thank you for this conversation, for your lessons, for your insights, and it's a great honor of being your friend.
Ivan, thank you very much. I really appreciate the opportunity to be on your show. I admire you. I admire what you've accomplished and will accomplish, and very proud to have you as a friend of mine.